Welcome everyone to today's Explainer. I'm stepping into the anchor desk today because, man, we have an absolutely fascinating mix of signals coming from the Bitcoin market this Wednesday, July 29th, 2026. If you're tuning in for a Bitcoin daily market report in English, delivered in a news format explaining three main price indicators, or for our global friends searching, Bitcoin daily 시황, 영어로 뉴스 형식으로 설명하는 동영상, 세 가지 주요 가격 지표, you are exactly where you need to be. Whether you're day trading or hodling for the next decade, we are cutting right through the social media noise today and going straight to the hard numbers.
I want to anchor our whole conversation today in a classic piece of wisdom from the legendary investor Peter Lynch. He said, never invest in anything you don't understand. Simple, right? But in a market that's completely driven by intense emotions and crazy volatile headlines, our mission today is to give you that fundamental understanding. We're stripping away the hype, we're ignoring the panic, and we're just going to let the structured data tell us the real story of where Bitcoin stands right now.
So, here is our agenda for today's market scan. 1. Power law valuation. 2. ETF fund flows. 3. On-chain sentiment. 4. Today's news roundup. And 5. Our final wrap-up.
All right, let's talk numbers. Bitcoin is currently sitting at $64,469. To put that into a little perspective for you, July has basically been a giant ping-pong match inside a trading box between 62,000 and 67,000. We hit a local top of 66.9K on July 21st, dipped back down to 62.9K, and what we're looking at right now is essentially a recovery right back to the middle of that box. But is 64,469 expensive? Is it cheap? To answer that, we've got to look under the hood.
Section 1. Power law valuation.
Okay, so for those who might be new to this specific metric, the power law model, and we're specifically using the Santa Sassi slope of 5.8 here, is an incredible long-term valuation framework. Instead of obsessing over daily, short-term volatility, it acts like a macro GPS. It maps out historical growth curves to determine a mathematically calculated fair value alongside lower price floors. It is literally a cheat code for filtering out the market noise and spotting true, long-term accumulation zones.
Now, get a load of this contrast, because it is wild. Our current price is around 64.4K, right? But the model's 2026 fair value sits at a staggering $180,731. That means, mathematically speaking, we are currently trading 64.3% below fair value. But wait, it gets even crazier. The model's absolute rock bottom floor for 2026 is $75,907. We are literally 15.1% below the current year's floor, hovering a lot closer to the 2025 floor of roughly 54K.
So when you actually digest those numbers, the conclusion is practically screaming at us. Being 15.1% below the current year's floor places Bitcoin in a historically deep value long-term accumulation zone. Period. From a purely mathematical and macroeconomic standpoint, this asset is massively undervalued right now.
Section 2. ETF fund flows. Now, let's shift gears from the math to the big institutional wallets. After a nice little period of green inflows, the spot Bitcoin ETFs have just posted a fourth straight day of outflows. The bleeding actually started on July 23rd, but July 24th was the real gut punch, a dramatic single-day outflow of over $240 million. The momentum has definitely flipped late in the week. When we tally up the damage over this recent 5-session period, we are looking at a pretty heavy total outflow of $457.4 million. Leading the retreat was BlackRock's IBIT, which dropped to nearly $439 million all on its own, alongside some pretty significant outflows from Grayscale's GBTC and Fidelity's FBTC. Make no mistake, this is a clear, short-term withdrawal of institutional liquidity.
And this is a really big but. Context is absolutely everything here. Yes, a 4-day outflow streak totaling $526 million sounds intimidating. It for sure impacts short-term price action. But let's zoom out for a second. The cumulative net inflow since these ETFs launched is a massive, positive $51.4 billion. IBIT alone accounts for over $60 billion in cumulative inflows. So while the short-term trend is looking a little bloody, the long-term institutional adoption, it's incredibly robust. Don't lose the forest for the trees. Section 3. On-chain sentiment.
Okay, let's dive into the actual psychological state of the market right now, which is frankly my favorite part. We've got two specific gauges to look at. First is the MVRV ratio, currently sitting at 1.21, and second is the Fear and Greed Index, which is currently sitting at a really low 29, meaning we are firmly planted in the red fear zone.
What we are seeing here is one of the most fascinating divergences you can find in market analysis. The MVRV, which basically divides the market cap by the realized cap, shows that at 1.21, the asset is fundamentally healthy and actually bordering on undervalued. Remember, a score below 1 means holders are underwater, and anything above 3 is dangerously hot. We're at 1.21. It's totally fine. Yet the market psychology gauge is terrified. The math is completely calm, but investors are panicking. The actual underlying value of the asset and the current emotions of the investors are completely disconnected. To finish painting out this on-chain sentiment picture, let's check a few more vitals. The Coinbase premium is currently at negative 0.14%. Since Coinbase is mostly used by US folks, a negative premium tells us there's heavier sell-side pressure specifically coming out of the United States. Meanwhile, the 8-hour funding rate is essentially flat at positive 0.0046%, and the 14-day RSI is dead center at 50.1. So aside from some localized selling in the US, the broader mechanical metrics of the market are just perfectly neutral.
Section 4. Today's News Roundup.
Let's hit the top stories shaping the tape today. First up, Morgan Stanley officially listed spot Ethereum and Solana ETPs on the NYSE Arca. The timing here is super important. On the exact same day that Bitcoin funds were bleeding out, Ethereum ETFs actually took in nearly 38,000 ETH, that's roughly $71 million, over a 7-day period. This really points to a strategic capital rotation into altcoins by institutions rather than a mass exodus away from crypto. Also, if we zoom way out to the year-to-date view for 2026, Bitcoin ETF net outflows are sitting at roughly negative $4.84 billion. It's an annual deficit, sure, but it's actually an improvement from the negative $5.4 billion we were looking at in early July. The ship is slowly but surely turning around.
Section 5. Final wrap-up.
All right, let's pull all these threads together and see the complete picture for today. Number 1, the power law dictates that the current price is historically deep below fair value, putting us squarely inside a long-term accumulation zone. Number 2, despite that crazy value, institutional ETF flows are definitely showing acute short-term bleeding with 4 consecutive days of outflows. And number 3, market psychology remains completely trapped in this state of fear, even though the underlying on-chain health metrics like the MVRV and the RSI are totally neutral or undervalued.
Which leaves us with the ultimate question for you to chew on as we wrap up today's data. We are staring at a massive, glaring divergence between emotional sentiment and mathematical value, with those short-term institutional outflows clearly driving the market's fear. Is Bitcoin at $64,469 a falling knife that you should avoid? Or is this precisely what the ultimate long-term accumulation zone looks like right before the next cycle takes off? I'll let you weigh the data and decide that for yourself. Thanks so much for joining me for today's explainer, and keep learning.